The new lease standard will require nearly all leases to be recorded on the lessee's balance sheet, but only if the lease falls under ASC 842. How do you know if your leases qualify? Hi, I'm Priya Singleton, Quality Control Officer at Blue & Company, and I'm going to explain what is a lease under ASC 842. It is important to know that under the new guidance, whether an arrangement is or contains a lease is based on whether the substance of the contract meets the definition of a lease and not whether the header of the contract states the word lease. Under previous guidance, an arrangement is a lease or contains a lease if the customer either 1. Has the right to control the use of the specified asset, or 2. Obtains substantially all of the asset's economic benefits. But under the new guidance, both of these conditions need to be met. To emphasize, the new guidance requires an and in this criteria, not an or. At the inception of a contract, you should determine whether the contract is or contains a lease, similar to previous guidance. Let's take a deeper look at the criteria that's required to be met for a contract to be a lease or contain a lease under ASC 842. For a contract to meet the definition of a lease, the underlying asset in the contract first needs to be identified, either explicitly or implicitly. Explicit identification is just as it sounds. The asset is named in the contract through the use of a serial number or part number, or stated, such as a building, a floor, a bus, etc. If an asset is not explicitly specified, it must be identified by being implicitly specified at the time when the asset is made available for use by the customer. For example, say you enter into a transportation service contract, but the supplier only has one truck to fulfill your contract. Then that truck is deemed to be implicitly identified in the contract, even if it is not mentioned at all in the contract. In addition to being explicitly or implicitly identified, the supplier, meaning the lessor, must not have the right to substitute the asset with other assets to fulfill the contract. In our example, the supplier should not be able to replace the truck in the contract with another one without your approval. If the contract does not contain an identified asset, it is not a lease. The lessee should also have the right to obtain substantially all of the economic benefits from the use of the asset throughout the period of use, meaning you need to obtain substantially all of the output from the asset. If not, then the arrangement is not a lease. The lessee should also determine who has the rights in the contract to determine how and for what purpose the asset is used throughout the period of use. If the lessee has this right, then the arrangement is a lease. If the supplier lessor has this right, then the arrangement is not a lease. In many cases, it is relatively easy to determine whether the customer has the right to direct the use. For example, when you lease an office building, it is clear that you have the right to direct how and for what purpose the office building is used. In some cases, this determination may not be so clear, such as in situations where the relevant decisions about how and for what purpose the asset is used are predetermined. In such cases, the customer is deemed to have the right to direct the use of the asset if the customer either has the right to operate the asset, or the customer has designed the asset or specific aspects of the asset in a way that predetermines how and for what purpose the asset will be used throughout the period of use. Sometimes there may be contracts that do not say lease, but that contain embedded lease agreements. An embedded lease is simply a lease agreement that exists within a contract. Organizations that typically have service contracts often have embedded leases. For example, entities that have outsourced arrangement for business operations and support, supply arrangements, data center, hosting, and other IT arrangements may contain embedded leases. Although you may have dealt with embedded leases at lease accounting in the past, the new standard brings operating leases and even some type of service contracts onto the balance sheet. I recommend taking a closer look at your service contracts to ensure that you have a complete list of all the leases. Thanks for joining me for a game of This Is Not a Lease. For a deeper dive into these lease criteria, click on the link below and download Blue & Company's ASC 842 Lessee Implementation Guide.